All right, we don't really have a good intro video since this is our very first English broadcast, so we did what we could. Welcome to the Kingdom's first English podcast. Tonight we're doing a little pilot, which will be introducing our first pilot week. We're expecting most of our audience tonight to be the same audience we usually have back in Norway, so you know what's up. We're going to be having a tax broadcast with Ernst & Young and the Norwegian Tax Authorities tonight. Norwegian tax authorities are world leading within the field of taxing crypto, NFTs, Bitcoin, and so on. So whichever jurisdiction you're from, this broadcast is ideal for you if you're confused or struggling with how to deliver your taxes now as the deadline is approaching fast. I won't be here for much of this broadcast. I have some very good partners who are in Oslo right now hosting a physical meetup, which is accompanying this virtual online event. And we're going to be joined in the studio by first Magnus Jones. You're in Oslo, Magnus. Do you hear me?
I can hear you, Eric. You can hear me as well.
I hear you perfectly. Thank you so much for organizing this event. I'm going to just connect you with Robert, and then the show is really up to you.
Perfect. If you just share my screen first here, Eric.
Okay.
Just before we pass the word to Eric, to Robert, sorry, we would just like to sort of highlight the landscape that we're looking into today. Because you, Eric, you are driving a very important community channel here, which we now are looking forward to going from Norwegian to English and make it even broader. So you are, of course, focusing now on Bitcoin, but we also clearly see that lots of your community members are looking into different other DeFi solutions. Some have NFTs, etc. So we're looking into this whole broad landscape of everything here. And together with us today, we have Robert Arestrup, live in Bergen. Are you with us, Robert?
Hey, thank you for having me.
Thank you for joining us, Robert. And I'm quite sure that you can confirm as well that the numbers that we see here is quite volatile, quite interesting, and we see quite a few Norwegian and also international actors going into this landscape. So by that, Robert will take us through some elements from the tax authorities, which is important to think about on this annual tax return. And after that, I will go through a little bit more in depth on some other aspects and also discuss a bit with Robert. It's possible for all of you out there to submit your questions in the chat. Some of you have also sent me questions on Discord, on LinkedIn, on Telegram, etc. I will try to go through those as much as possible. And also here in the audience, it's possible to ask questions. So by that, I'll pass it over to you, Robert. And Eric, you can share the screen of Robert.
I'm afraid Robert is sorry. Robert is not sharing his screen. There we go. Now he is.
Perfect.
Thank you very much. I'm very happy to be here today. I'm going to tell you a little bit about the virtual assets on the tax return for 2021. First of all, I just want to start out with saying that we are well aware in Norwegian tax authorities that this is a complicated field for many on many levels. And we have tried our very best to make this as easy and user-friendly as possible, even though many might not seem to be agreeing with us on that accord. But we are really working hard with this, and as well as our guidance, which I work closely with. I want to start out with some slides here, just to see what we have to report on the tax return. If you have invested or traded, you have to report on your tax return. Gain loss for each virtual asset, that will mainly be for cryptocurrency, but also now the space is evolving, and we are also including NFTs and other digital assets in the virtual space. We have a wealth tax in Norway, so you have to report the value of your virtual assets. We also see other income from virtual assets arising. It could be some kind of rewards and maybe from staking, airdrops, or otherwise. If you have done any verification activities like mining, staking, or something else, income from all activity and virtual assets are taxable and must be submitted to the tax return. Also, expenses will be able to deduct. We will Magnus will go further into this later on, but especially if you have a mining rig, if you have electricity bills going up, these are expenses you can deduct from your income. So how to report this? We have a new digital tax return in Norway. We have worked very much with it, and we want to make it user-friendly, and we're still trying to even improve it for next year. For this year, we have a card called virtual assets, cryptocurrencies, and you can here have the option for reporting for one virtual asset or for a summarized version. I will go into this later on. Also, we have the possibility to use the old solution in Altinn. This will be probably last year you can do so with a form called RF 1159. We'll also have a quick look at that one real quick afterwards. The option for one card for each virtual asset looks something like this. You enter the values for wealth, income, loss, and additional information for one virtual asset or cryptocurrency like Bitcoin, for example. And you fill out all information about Bitcoin here, and you add one more card for each virtual asset you have traded or owned through the year. We have gotten some questions here about the fields for wallet address and name of exchange. These are not mandatory fields, but it will help us and the tax authorities just to check if they're seem reasonable what you have reported. And you might save yourself from a call or a letter from us wanting to have further information about your tax return. So it's not to do anything suspicious with your wallet address or to get this information. We just want to quickly check if it seems correct. If you have done a lot of trading, have a lot of different virtual assets, it's recommended you use the summarized card. You will choose the option here. I want to add some text information, and you will here have to submit an attachment with the specifics in a document. Can show you just quick how this can look like. If you have like an Excel, you can just make an overview of your crypto assets, NFTs, mining, etc., and just submit the overview. What is important to know is that you have to convert it to a PDF or a picture file before uploading it. Our systems does not take normal documents or Excel files yet. I'm just gonna go to the RF 1159 form. This is the old version. This is for 2018. This is much the same information you'll have to submit in a new tax return, but you have to submit one row for each asset, and you have to scroll in the form here just to fill out the rest. It's not very user friendly, but and it's mainly if you have changes for earlier tax returns, which we will just look at afterwards. Because you have the option to correct wealth and income tax. If you find that something is incorrect or missing from your tax returns for earlier year, you can change the information yourself by just submitting a correction or make the changes in the actual tax return. For the current tax return, which is for the income year 2021, you just log into your tax return, make your changes, and submit it anew. And we'll make the corrections now before the tax return is processed. For the 3 last years, you can also correct it by submitting a correction. For 2018, this will be possible until 30th of April or 31st of May if you have a business or a postponed delivery. For later years than this, you can make changes by submitting an appeal to the tax administration. This requires a little more and will be assessed for the change by the tax administration before it will be executed. So kind of the correction here must be of some value or some significance. I also want to highlight our new NFT guidance. We are also proud of being able to launch this just before the tax return period here in Norway this year. Middle of March, this was published, and Magnus will also go into the more specifics from our guidance and his thoughts about the taxation of NFTs just later on. What I want to say before I close up this short and quick walkthrough of the steps to report your crypto assets and virtual assets in the tax return for 2021 is that if you don't get it quite right, it's better to have tried. You can attach explanation. You can also contact us if you have any questions, and we are very understanding of the complexity of some of your issues regarding this space. There is probably the biggest area where we need people to just start reporting instead of not reporting, actually. So come on. I hope this presentation here will make you not afraid to report what you have in crypto assets. If it's big or small, it's better to have given some information. Otherwise, you could end up in a bigger jam, and you had to. And that's what I got from this part today. And I'll give the word to Magnus.
Perfect. Thank you, Robert. And it's great that you guys are out here, and also in terms of that we are now actually doing this one in English, because we have clearly seen from being out there in the market, meeting people all over, that there's lots of non-Norwegian native speaking persons in Norway, and they have struggled a bit of finding the right guidance. So we really appreciate that one. And in addition to what you also mentioned, Robert, that I would just like to highlight that, of course, this will be available to watch afterwards, and we can also share slides if someone would like them. Just send me a DM. But also, if you go to the tax authorities website, and if I will just get the screen up here, if you please share that screen, Eric, thank you. If you just go to the tax authorities official website, skatteetaten.no, and just enter in crypto, virtual assets, virtual currencies, etc., you will come to this page. And as you can see, and up here, you have to choose the language into English, which I have set now. And as you can see, they have done quite a good job. Apart from that, on DeFi and NFT, it's still in Norwegian. So that's the job for you guys to do, Robert. But otherwise,
I will get right onto it.
Yeah. But otherwise, it's a very good overview of everything you need of purchase, sales, mining, and in general a guidance on this one. But also down here at the very bottom, it's a very useful link to click here, and that's where you guys have a video on how you actually are submitting it, because you showed some decks here and the cards that you may actually report it on. Because what we clearly hear from the market is that, well, it's fine the PowerPoint that you showed us, but when you sit down yourself with Altinn, it's a nightmare to find out where is that bloody RF regime, and also how to physically do it and get it in here. So this video that takes a bit of time to stream it here, but here it is, a video of 6 minutes approximately, that shows you step by step how to get it into Altinn and how to report it both on the new and the old reporting form. So very useful, even though it's in Norwegian, it clearly shows you step by step. So I truly recommend that one if you are sitting there on the night before submission and are struggling to get the physical things in, and you have managed to calculate what to submit, but are struggling to technically get it in. That's a highly recommended video. So just see if I'm just multitasking 3 screens here, and see if we can get just a second. Let's see, there we are. So before we go in depth on the various different areas here, I would like to highlight and stress some of the things that Robert also said. And 3 important things that we believe you should take definitely into consideration is document everything, absolutely everything, because it's down to that you might trust an exchange, or maybe you feel you have a good overview, but that exchange might disappear. They might don't give you access to the documents anymore and all the numbers. And it's no fun if you get a control of the from the tax authorities after maybe not this year, maybe not next year, but in 3 years' time, then there's no fun trying to figure out what you did. So for your own sake, I highly recommend to use a spreadsheet, a Word document, whatsoever, to do everything that you do, at least from a bullet point of view. If you're doing 10,000s of transactions, I don't mean that you should put all of them into Excel necessarily, but at least make some notes and overview so you have a story, you remember it if you receive a control of your crypto accounts. And also what it says under there, inform about it. Robert partially mentioned it, that you can voluntarily disclose your wallet address. And lots of people out there naturally are instantly skeptic about sharing it. But we'll get back to that part, that this is actually a transparent element. It's pseudo-anonymous, and it's down to also the fact here of my point that some people in relation to this thinks that, well, I've done all of these deals. If I reveal some kind of information about all of these deals to the authority, then I automatically will receive a control. And I cannot talk on behalf of the government and disclose what kind of elements they're looking into in this annual return, because that's different elements from year to year. But I can assure you that if you have done lots of transactions and you don't have a full overview of what you've done, you do not submit that information to the tax authority, and they show up on a control, they can give you additional taxes and fees based upon that. But if you have disclosed it just by bullets, you can ensure and reduce the additional tax that may be applied for you. That can be everything from 20 to 40 to, in worst case, 60% additional tax. So hence, just by submitting an overview of everything you have done, either in detail or by bullets, that could save you some tax money if it occurs that you have not calculated this correctly. And remember also bullet point number 2. All crypto transactions, they have an element of tax. And by that, we're not saying that all elements have a direct tax element, but all elements of a crypto transactions need to be recorded in terms of you need to be able to prove it, to showcase it to the authorities if they show up on the control. So also in terms of, let's see if I can get the slideshow to work. There we have it. Also this one that lots of people are struggling about and understanding, and that's if you go from one cryptocurrency to another, i.e. you swap from one to the other. So if you go from an ETH to a Dogecoin to a Bitcoin to even a stablecoin like USDC, all of these are taxable events, and you need to calculate a capital gain or a loss on them, even though you don't go into fiat, i.e. into exchanging into ordinary Norwegian currency, euros, whatsoever. And also on the last part there, on the USDC, lots of people are thinking also that, well, a stable coin is a stable coin. That's stable towards normally US dollar, whether or not it's USDC, Tether, or what else it might be, a DAI, for example, in the DeFi world. The challenge there is rather that the stable coin, just as ordinary US dollars, are not 100% stable. So a stable coin might have the value of 0.9987 at one time, the other time 1.01, and like Tether had at some time 80 cents only. So it means that even though it seems like small numbers, if you have large amounts here, that could have a huge impact. So it means all of these stablecoins elements also need to be handled if you are following the book here. So I'm not going to talk on behalf of you, Robert, but I'm quite sure that you will not apply 60% additional fees if you have 0.0999 and you have typically purchased for 1,000 Norwegian crowns. But if you have acquired it for 100 million Norwegian crowns, it could have an impact. So take that into perspective, that all cryptocurrencies needs to be calculated on. And the last point, lots of people are trying to be creative within this landscape. And that's fair enough, because it's a very complex, fast-growing landscape. But take into consideration, if you have a gain, normally there's a tax also. That's just how the world works. So take these steps and friendly advices into consideration, and I can assure you that it will be much easier to report. So going over to the crypto and tax in general. You have 3 main points that you can go into here. One is that you purchase cryptocurrencies. One is that you pay a wealth tax in these jurisdictions that has this, like in Norway. And then you can also sell the crypto. But it's not only about that you can purchase them directly. You could acquire cryptos from mining. You can be lucky enough to receive it as a gift or even as airdrops, for example. When it comes to the wealth and the reporting there, you could also receive income. Quite a few of our clients is working within this landscape, are paying people with crypto, receiving crypto as salary for jobs being performed. And then again, you could also be entitled to deductions. So we'll look into that one. When it comes to selling your cryptos, it could be that you're not that lucky. You could lose your keys. you could use them, spend them. And unfortunately, there's also lots of fraud out there, and we'll see and look into the taxable elements of that. So if you take the first thing first of purchasing cryptos, if you go in with Norwegian crowns, swap that to euros and buy that at an exchange, or go directly to a Norwegian crypto exchange with Norwegian crowns, there's no tax element directly. No tax should be paid on that purchase. However, as mentioned, it's a possibly taxable transaction. So you need to keep track of when you have bought it and at which exchange rate you bought it for. Hence, again, as it says there, document everything down to the transaction cost, the exchange rate, time and place of purchase. And it's also important to know the input value of this one when you are selling this one. Hence, the price plus the transactions costs. And the purchase, if you sit still, you have acquired it in June, you do nothing with it, and you sit still with it until the 31st of December, then it shall be reported in the valuation of a wealth tax or not, based upon the limitations that are there. So I would also like to stress that even though I said it's if you sit on it, of course, up until 31st of December, but for some strange reason that not even the tax authorities can explain to me, the Minister of Finance has decided on when it comes to crypto assets in Norway, it's the value of the 1st of January that you should put into place when you submit your tax return. The 1st of January at 12, that's the rules that we have there. So remember that one. And I'm sure that Robert and his team will not come and arrest you if you use the exchange rates of the 31st of December. But again, don't try this to shop around if there's large volatilities from 31st December to the 1st of January. And also the tax authorities on the website that are shown, they have then exchange rates on the most popular cryptocurrencies. So you can actually go direct to their website and find it there. When it comes to mining, and also Robert, if you have any comments, just feel free to break in here. As more than happy to do that, and I will also play a bit with you on the more detailed cases going forward.
Yes, of course. Just want to add that since there is no regulated market or official market or values, you just have to choose one of the exchanges or one of the websites giving you the exchange rates for the cryptocurrency and use this at the time in the 1st of January, as you said. But which time you have to decide, but you have to keep true to the one you have decided for. So you can't shop around, but we won't arrest you for using other exchange rates than on our webpage suggested at skatteetaten.no.
Yeah, I'm coming to that part also on a couple of slides, so I will stress it once again, Robert. So, but thanks for clarifying. When it comes to the mining, if you receive income from mining, that's taxable, and it's the market value of the mined crypto at the time of mining minus the costs of deductions that might be applicable there. That is equal to the taxable income that should be reported and calculated on. So it means that expenses to mining equipment, electricity, etc., is deductible. However, it's not that easy that if you have an apartment here or a home in Norway, you have expensive electricity, you just go out and buy some mining equipment and you try to deduct the whole invoice of your electricity bill. You need to look into a proportional deduction there to figure out how much electricity does this actually use compared to the rest of the home household. So as I normally say, you have to be able to stand with the flush test. If the tax authorities shows up on the control and they ask you why have you done it in this way, and you're starting to flush, well, then you have done something wrong. So try to be fair on it, because they will clearly see through this if there's unreasonable deductions within this one. And also a question that occurs quite a lot, Robert, is whether or not the activity that you drive within this one, it could turn out that it's quite large numbers. And we also seen lately in typically the Corona years, the COVID years, that people has lost their jobs or had to do other stuff. They started mining. And they are concerned about whether or not this is considered to be a business activity. Could you fill us in a little bit about how you consider this one? Of course, there's ordinary rules around that from the tax point of view, but as Marius, your colleague that we have been presenting together with previously, also had said that normally here within the COVID years, if you have started mining and you have gone back to your normal work again, it will not be considered as a business activity. Is that something that you can confirm as well?
Well, yes, and this is a very difficult question for us, because the business activity for especially mining would require quite a bit, we reckon here. For other businesses, it's easier to use the regular assessment, but for this it could be just a high number of machines working and not a lot of effort from the owner. So these are assessments we have to do in each case if it's nearing to be a business activity or not.
Yeah. So if you are in doubt, consult the tax authorities or an advisor in some way. And also on everything we say here, when we say consult the tax authorities, be sure to be asked to be put forward to a person at the tax authorities who has knowledge about this one, because just in the same way as in the ordinary world, we cannot expect that an average case handler would know if you come up with, I have acquired this derivative and put it into a synthetic product, how is this to be taxed? So in the same way, we cannot hold the tax authorities liable for not having a full overview of 90,000 shitcoins out there. So please do not, if you just ask an average case handler, do not take if that person has said, well, I'm not quite sure, to be the final answer. Ask to be put forward, and the crypto group of the tax authorities is highly knowledgeable on this area, so they're more than happy to assist you. And when it comes to staking, that is treated as a type of interest income, not per se by definition, but in the same way. So if you are putting something into a smart contract, you earn interest on it, that's taxable as a capital gain, as a capital income as a main rule. But also it's questions relating to sort of saying that if you put Bitcoin or Ether, whatever it might be, into a smart contract, you lock it up there. And we'll get a bit back to that when it comes to the DeFi solutions as well. But is that to be considered as a realization of it, i.e., as you have liquidated that cryptocurrency and you have to then calculate a capital gain or loss on it, i.e., for example, if you have acquired a Bitcoin for $3,000, you lock it up in a smart contract on staking, receiving interest, and now the Bitcoin is worth 30,000. Is that a capital gain that you have to register of 30,000 minus 3,000 and pay 22% interest? Or is it like you just have a loan and you put it in there? How is that, Robert?
Well, also here we have to have a concrete assessment of the actual doing of this. But you can say if you have given the right to use that coin or token to someone else, you have realized it and will have to make a gain or loss valuation on it.
Yeah. So we normally say as a main rule, if you forward your cryptos to a wallet from a wallet that you control to a wallet that you do not control, then there's a taxable event and it should be calculated a capital gain or loss on it as a main rule. So keep that in track in the same way as I showed as the start here, going from ETH to Bitcoin to Dogecoin to whatnot. that's taxable events all over, even though if you acquired it on the same day also, it could have a different price, and you should calculate a capital gain and loss on it. When it comes to the wealth tax, the main rule is that all crypto you own shall be reported on the tax return as wealth. And you need to then find the quantity that you acquired, everything like the ones that you purchased, if you received some gifts, the airdrop, mining, etc. Then you need to calculate the market value, as we have touched upon previously, and find the exchange rate. And here is also what Robert previously stressed, that you cannot necessarily shop around to find the best exchange rate. Take one exchange in the US, one in Asia, one in Norway, whatsoever. You need to stick to some kind of pattern that makes sense in sort of way. And as stressed previously, it's the exchange rate of the 1st of January that should be put in place. And also here, keep track on the documentations there of everything from annual summaries to bank statements, transaction logs, etc. It's very useful to have that, both for your own sake, but also in terms of if you receive a control on your accounts.
If you have the right documentation, it can save you from many sleepless hours before giving you tax return in. I have helped a lot of guys and girls who has not the right documentation, and it's very hard to find the documentation just only after a few months in the crypto sphere.
Absolutely. We can confirm that. I have also a couple of colleagues in the audience here as well, and we spend literally months on reconciling data and trying to find the right numbers afterwards and trying to restore it, even though everything is in theory visible on the blockchain. So you could download it, sort of saying, but it could be also a nightmare because you could have traded on behalf of others. You have used different wallets. You have hot, cold storage. All of these things that makes this quite an extensive mess. So keep track of things. That's the friendly advice as so. And when it comes to selling your crypto or realize it or using it, a sale or use, as we briefly touched upon, is considered to be a realization, and there's a tax to be paid on that one for 22% if there's a gain. So a capital gain or loss shall be reported in the tax return, and the gain or loss is reported in the way that you take the input value minus the output value on the time of transaction. And the input value is the purchase amount plus the transaction costs, while the output value is the sales amount minus the transaction costs. And if you have more than one crypto of the same item, i.e. you purchased a Bitcoin in 2012, 2013, 2017, 2022, you can choose which one that you would like to sell first, i.e. on the principles first in, first out, last in, first out, highest value in, or etc. But you cannot, as Robert also stressed, shop around in the same tax year. You need to stick with one principle in the same tax year. You could choose to go to another principle in the next tax year. However, I stress, do not try to make a smart move there by yourself by just making a mess and confusing yourself in terms of mixing up the numbers. Hence, back again to document everything. Keep track of this one because it's very complex. And I would also like to say, some of you might think that it's just you can go out there, use a tool like in Norway, CryptoSekken, or we have various different, we have lots of different others out there. It's tens of them out there, tools. I can say from working with this landscape since 2015 and dealing with the most complex cases that none of these tools are calculating a tax return fully 100% correct. Yes, they do it if you stick to one exchange and you just extract that one, you have traded one cryptos or two or whatever, that's fine. But if you have dealt with some kind of other swaps, you've been into ICOs, typically some DeFi solutions, and you have hot and cold storage, there's no such thing as just pushing one button and calculate the tax, unfortunately. So keep that in mind also, that we clearly see from assisting people here. If you have a bit more than just one transaction, that they download one tool, try to upload their data into that one, calculate it, press calculate tax, and they quite cannot figure it out to be exactly what they had in mind, because they can see some transactions are here and there that doesn't make sense. Then they try another tool that gives you a totally different thing. Oh, the one says minus 200,000, the other one says a gain of 800,000. And then you use a third one, and then you have another different number on that one. And that's also down to lots of these tools are being made for the US market. So we have to adapt them to the different rules that are applicable in your jurisdiction. So it's not that easy to just go in, use a tool, upload, press calculate tax. You have to take manual considerations into account here as well. So please remember that one. Unfortunately, as of now, there's no quick fix there. Yes, on many cases, like CryptoSecond, they're brilliant to assist you. But if you have really complex transactions, you need to deal with this manually. And that's also down to these kind of things, like the pre-sale groups. Lots of the people that we meet in the community are members of such. i.e., you have a token that entitles you to buy at day 0, or day 1, or 2, or 3, and then you can go out in the market and sell it there. And of course, there's lots of people who is buying for their friends, their grandma, or whatnot, or even set up smart contracts in a DAO structure where they just invite people in so that you can share the profit of it. And if you do these kind of things, and we have seen quite a few instances where we have assisted people where they have made a mess for themselves because they are just receiving lots of funds in and distributing them to tens, hundreds of wallets afterwards. And they have received control from the tax authorities, and then you have to explain and document and report this one. And that's also something down to don't go into just playing around with DeFi or whatever without understanding the complications and the impacts of it, because it will hit back on you. So it's good to be nice and think about saying to your grandma or your friends or neighbors, I can do this for you. But think about it. It has tax aspects with it. So keep track of what you do. And by that also, these are lines in Norwegian, but it's relating to something called voluntary corrections, that you can amend your tax return 3 years back in time by yourself. So that's possible. But if you have, for example, some cryptos that you acquired in 2015 and you have not reported it yet, you have to apply to the tax authority for a so-called voluntary correction on this one. And as these headlines states here in Norwegian, it is up for consideration now that these rules may be limited, restricted, or withdrawn in full. So hence, if you have some crypto that you have not reported more than 3 years back in time, we encourage you to report this one before it's too late, because then you could face very high additional taxes, and also in worst case, imprisonment if it's really high values and you have explicitly done it on purpose. We're not saying that you're going to get arrested for it, but you could possibly end up that in a worst case if there's large values involved in this one. So we are assisting also lots of different actors here who has had literally hundreds of millions of Norwegian crowns that hasn't been reported correct. And then again, they say, oh, here is my numbers and returns. And this is what I've traded. And the challenging part here is that, unfortunately, if you're doing a so-called voluntary correction, you need to have everything included, even the smallest amount. So lots of the players that we are assisting, they're saying, because we are saying, we cannot match these numbers exactly towards the wallet addresses that you have provided us with. And then they're like, oh yeah, but that's just some small Bitcoin transaction or some Ether or something that I lost or whatever. Then again, it's back to documenting everything, because in this case, we have to document absolutely everything. So once again, it could seem like a nightmare, but that's unfortunately just how the rules are. And as once again said, document everything you do, because it could hit back on you. But have that in mind. If you have crypto back in time, you could contact an advisor, or you could contact the tax authorities in terms of revealing that one. But you are only entitled to do a so-called a voluntary correction without receiving any additional taxes on it, if the tax authorities not already have started a control on your case without you knowing it as well. So it could be wise to confront an advisor on this one before you do something. Then it's down to this then. This is the thing that everyone says after listening into this, of course. It is bloody impossible to do this right. It's literally impossible. People are saying to us, Robert, I've spent 1 month, 2 months, 3 months of my daytime, nighttime, trying to do this correctly. And we clearly see this. They have, as I mentioned, used 1 tool, 2 tools, 3 tools, whatever, and they all calculate differently. And they come to us and say, just fix the tax for us, Magnus. Please just fix it. Pay whatever I want. I cannot stand this anymore. I cannot do it more because it's killing me. And I'm trying to do my best there, honestly. So we clearly understand this one. And the tax authorities also understands you. I can assure you that I speak on behalf of Robert and the team there. And unfortunately, it's not only down to that, it's the tax authorities alone that decides all of these rules. It's rather Ministry of Finance, and we also have tax principles in general that is applicable here that we cannot do something with, since cryptocurrencies is not considered as a currency per se. So in this case, of course, lots of people are also asking us, can I just move away? Can I just move to a free haven and get rid of all of these things? I cannot stand it anymore. And of course, we see that people are considering everything from Portugal to Marshall Islands, Singapore, Dubai, Germany, whatnot. And that could be tempting because you have read in some forums or whatever, Portugal, they are tax-free and they don't charge you capital gains or whatever. Yeah, that's fine. But if you don't have any other work in Portugal, you are then being classified as having this as your full-time job, and then you have to tax it as a business. Hence, you cannot go from it. If you go to Dubai, lots of people are going to Dubai now, and that's just because they have said, we are going to be the new blockchain capital, come to us. Well, once in a time, Dubai also said, we're never going to have VAT or sales taxes. Well, they have this today. And right now, they are in the middle of a new tax reform, which will come in place in approximately 2 years, which EY is also assisting on. So I can assure you that it could seem tempting. You could be all fine for a year or so there, but then things could happen. And in other ways also, all these jurisdictions have also elements where you either need to be physically present, you need to report in some kind of way. So there's no place in the world, unfortunately, where you can just hide away unless you are going to specific islands where you have Russian yachts or whatever present now. There will always be such places. But still, again, if you are going to do this one in sort of a way where you are going to spend your money also, don't try to make this more creative than it will be. And you also need to take into consideration basic things like, well, just moving from Norway instantly doesn't instantly make you a non-taxable person to Norway. It takes some years, etc. there. So if you're considering this, don't follow the advice of a Discord chat, but ask the tax authorities or an advisor. And there's, of course, preferable jurisdictions based upon which type of activity you are running. But they all vary and depends also down to getting just a bank account or an auditor or a bookkeeper, whatever. They all vary. So don't follow any quick advices here because there's unfortunately no such thing. And then we have something that lots of people are looking into. This is just an example. And that's down to something called sacrifice, i.e., in this case, for example, there's a guy who has run something called Hex. He's now doing our own separate blockchain called Pulse. He's building this one. He's asking people to put in money. And as you can see, they have received quite a lot of money. And people are sacrificing it based just upon the presentations that they will receive some tokens when they launch, but they do not necessarily have a, you can call it a legal contract, a physical contract whatsoever. They do not receive the tokens instantly. And that is then, in my mind at least, Robert, to be considered in the same way as you staking something. That, i.e., this is a liquidation. So if you put in here Ether, a Tether, a DAI, or whatever as a sacrifice, it is considered as a liquidation. Can you confirm that?
I would probably think so too on this one. I'm not quite familiar with the technicalities for this pulse sacrifice. As long as you don't donate it as a gift and as has no strings attached or rewards coming your way, I would think this would be, as you say, yeah.
Yeah. And at least Marius confirmed that one on Wednesday when we had him on the Norwegian ones. So and of course, all cases needs to be handled on a separate matter, and also take that one into consideration that things could look similar to others, but could be taxable totally different. So each time you go in and do something, you need to have it confirmed, sort of saying. You cannot just take the presentation that it's instantly the same. But in most cases for sacrificing, it will be considered as a liquidation of the asset. So hence you have to calculate a capital gain or loss on it. And also when it comes to this one, if you have a project like the example here of a Norwegian company called Iagon, who migrated their blockchain from the Ethereum blockchain to the Cardano blockchain, you might have some tokens on the Ethereum chain. Originally, you might have acquired them for when you received them, they were worth 10. Now they're worth 100. You're going over to a new chain, and you're going to receive new other tokens worth 100 as well. And then it's the same principle that you have received a token, and it could seem non-logic, sort of saying from that point of view that, well, the project team says, well, now the previous token, the Ether token that you had, has no value anymore, and now you're going to have a Cardano token that has the value, but we'll give it the same value. But still, it's considered to be a realization because you are changing this one in the same way as you receive another share, a stock, sort of saying. You go from one to the other, and thereby you have to calculate that you acquire it from 10, you liquidated it from 100, and then you have to pay a capital gain tax on 10 to 100. And then you have a new input value of the Cardano token that you receive, which will be 100 for possible calculations of either a gain or a loss, if that arises in the future, to more than 100 or less than 100. And the last thing here also, this is a map that Norwegian Tax Authorities has presented. And that's down to that this is not totally anonymous. And this is, of course, this slide was made with sort of a smiling face after it. It's not that tax authorities here in Norway says, we know where you live and we're going to hunt you down. It's rather that to illustrate, they have a good overview. All governments all over the world has a good overview of this one. They know where people are. This is a map of all Norwegians where the tax authorities has identified them, who has cryptos and where they live. And that's based upon that Norwegian tax authorities, as Eric also mentions, are, I would say, one of, if not the best in the world on doing clustering and tracing cryptos. And that means that they have done this since 2012, 2013. They have used their own tools, but they also use lots of other third-party tools, like you can see here. Some of you might have heard about Chainalysis, CipherTrace, which MasterCard recently acquired. You have Confirmed, Elliptic, you have a bunch of them. So this is down to sort of the element that even though that not all governments has published this map, they have more or less to a certain degree these kind of informations. So remember that one in terms of that this is just pseudo anonymous, it's traceable, it's out there, it's possible to connect IP addresses towards you, etc. So we're not saying this one in a way that we're trying to say there's a SWAT team coming up on your door tomorrow because you have Bitcoins worth 100 Norwegian crowns. But it's rather to just illustrate something that people presume out there, which we see a lot in the chats, that, well, the tax authorities wasn't able to answer me on these questions, and hence they have no control of overview. I can assure you that the core crypto tax for crypto task force group of the tax authorities, they have a very good overview of what's happening and going on in this landscape. And also take into considerations like things like the Monero, Zcash, Dash, Verge, etc., all of these privacy coins, even they can be traced to a certain degree. So have that in mind also, that don't try to be smart and hide away. It's rather down to this example of, some of you might have seen this couple in the US who was arrested allegedly being involved in a crypto exchange hack where they had billions of US dollars worth in Bitcoin, but they couldn't spend it because it's traceable, it's transparent. We could instantly follow when they moved assets from one wallet to the other. So this couple, they try to do something and they need to buy some milk and bread and butter. So they try to acquire a gift card on Walmart, and still then you will reveal yourself. So if you're trying to make smart moves, have these things into considerations. It's just as a friendly advice because lots of people are not aware of how transparent the whole landscape is here in itself. And in the end here, we are also now moving over to DeFi in brief here. And DeFi, decentralized finance, that's a very complex landscape. And I will just illustrate this one here with a case of MakerDAO, which is one of the first cases. DeFi vary a lot. So this is just a high-level example. And it works in this way, that you go in with the ETH, if you are on the Ethereum blockchain, which the majority of all DeFi products are. You put that into a smart contract as a collateral in the smart contract, and you place it there to receive a local currency, in this case, the DAI, which you can trade, borrow, lend, etc., do all the traditional finance elements just by using cryptocurrencies. And in this kind of way, when you put in an ETH there, you need to normally put it up as a collateral, which has a higher value than what you receive in DAI, because the Ether can be volatile. So normally you put in 150% towards DAI. So if you will say a ETH is equal to 1 DAI, it's not. The DAI is pegged to $1 close to, and ETH has a different value. But just think about it. You go in with 100 ETH, you will 150 ETH, you will receive 100 DAI. Just for example illustrating purposes. So this means that one needs to take into consideration and look here also on who actually owns the wallet here. That's very important things to look into. And that's down to this sentence that says here in Norwegian, but I will translate it in English, that comes straight from the website of the authority. It says, it is considered to be a taxable realization when you sell a virtual asset towards the exchange of another virtual asset, which we have covered already. But then it says sell, and here you are just locking it up. But in the same way as we talked about staking, sacrificing principles, you lock it up in a smart contract, i.e. it's to be considered as liquidated. So in that way, it means that you have a taxable event even before you have started your DeFi journey. So hence, if you acquired the ETH for 3,000 and now it is worth 30,000, you need to then calculate a capital gain on that one, and then you receive the DAI. So if you had the ETH, you put it in the smart contract, then that's gone, then it's out of the system. You don't have to report a wealth tax for that one. And you have to then report, if you sit still with the DAI, the wealth tax of the DAI if you sit still over the 31st of December. And also in here, lots of questions are relating to this one. The liquidity pool trading, in terms of that you put these DeFi tokens into a very complex landscape. It could be hundreds, 10,000s, even more, 100,000s of microtransactions that a system is executing here. So you might have a good tracking overview of what you put in numbers of the DAI and what you have received in the end, but possibly not what has happened in the middle. And also, while dealing with all of these complex structures, you might receive some interest from liquidity pool trading. And Robert, when it comes to the interest here in the liquidity pool trading, we, and I know also you, receive quite a lot of questions around it. Can you give us some brief indications on how that is going to be interpreted?
Well, all income from crypto assets are considered taxable. That's the easy way to say it.
Yeah. So take that one into consideration, but it could also be down to that you have elements where, for example, Auth and Compound, for the ones that knows these one, they are calculating interest in different ways. Some are calculating interest on a microsecond level, and there the tax authorities has also said that for practical purposes, you should, or for the actual purpose of following the books and the rules, you should have a new input value each microsecond, because it varies when you receive it. But for practical reasons, they have said, well, you could rather take it as a whole when you actually withdraw the interest amount and you have access to it. So we are not going to be handling billions of input values of micro value of your cryptos, but rather a practical element towards it. So that's also something that we would like to give credit to the tax authorities to be open-minded and actually understand the implications of it. But having said that one, each case needs to be handled on a separate matter. So no cases here are exactly similar to the other. So if you are in doubt, ask an advisor or the tax authorities on how these are to be dealt with. And also this one in terms of governance tokens, because you could receive so-called governance tokens, an ownership token, and some of them are just airdrop to you also. They have value. So if you receive an airdrop, it has normally some kind of value, and you have to put a fair value towards it. It could have zero value, but then you need to try to do your best and make a fair value of what it has. So in terms of wealth tax reporting of the 31st of December, and if you sell it, of course, there's a liquidation element where you have to register the input value. Hence, again, document everything you can when you receive the governance token, because you need to have the input value when you are selling it, because you need to calculate the capital gain or a loss on this one as well. So don't treat governance tokens as they're worth zero. When it comes to wrapped tokens, i.e. you have two chains, you have the Bitcoin blockchain and the Ethereum blockchain, and they do not naturally talk between each other. You cannot spend and use a Bitcoin on the Ethereum blockchain and vice versa. Hence, therefore, someone has also made smart contract solutions where you can put this one in and you could wrap then that Bitcoin into getting the same value as it had on the other chain. So then you can sort of use and spend that Bitcoin as the value of it on the Ethereum blockchain and trade it within DeFi or whatever. That is also to be considered as a liquidation, even though if you have solutions where you could lock it up in the same way that if you pay the loan back, you will receive your Bitcoin back. But even though you stake it, you put it into the smart contract and wrap it, you get another one. That means that you have liquidated a Bitcoin, you have received a wrapped Bitcoin, and that has another value, another input value from the moment that you do it. And also, this one is an element that we would like to stress. We clearly see that there's a new generation out there. And this is a friendly warning to the ones of you who have children. Because not only do you need to figure out what kind of websites they are touching up on, but you need to figure out what kind of games they are playing and what kind of DeFi solution they are playing with. Because here are just some examples of a 13-year-old boy who made a DeFi $1 million business. You have 12-year-old who's in the NFTs making millions, and there's lots of examples around this one. I can continue for the rest of the evening, and we also have cases where we have had to assist parents because the children have had lots of values within this one. So take that one into account, that if your children are playing games like Roblox or are in metaverse games or whatever, it could appear that they, or if you don't even have kids and you do it the same, it might be that you are grown up and you're a gamer and you think, oh, I just acquired a skin, a sword for a game or whatever element it might be for that. That could be an NFT, it could be a token, it could be thereby a taxable event. And lots of people are just sending these skins and swords and whatnot back and forth to each other without thinking about this one. So have that in mind also, that you could possibly have a huge tax implication towards your children, which you as a parent could be responsible for, or yourself if you're just playing around on these games without taking that one into consideration. So always understand what you are playing with. Don't go out there and just play. That leads us over to this one, the funny monkeys and NFTs and the great hype around this one, of course. And the main rule there is that NFTs are to be taxed in the same way as other virtual assets, as other cryptos. That's the main rule. And as Robert mentioned, Norwegian Tax Authorities, they were first in the world to issue guidance on how to tax your DeFi protocols. And now they have done it again this year by being the first in the world to give us guidance on how to tax NFTs. Of course, not 100% extensive, but at least a very good element in terms of making clarity towards this industry. So in general, when it comes to the NFTs, you could either create them yourself, you could buy them, or you could sell them. But you could also then, when you create them, have an income from them. Thereby, you could be entitled to a deduction. And when you buy them, you could also receive them as a gift or an airdrop. Or when you sell them, you could also, on the other side, lose the keys, or you could be executed by a fraud in that way. So here, when you sell an NFTs, there's lots of elements. And if you're listing an NFT at a marketplace, there's lots of fees that are to be paid. Minting fees, listing fees, commission fees, etc. These fees can be quite high. They are then entitled to be deducted as a main rule. But what you have to think about here is that normally you have to pay these fees in crypto, like for example on Ether. So in the same way, you go in with Ether, you pay that one, and that is then a taxable event before you have even started here as well, just the same way as the DeFi. Because you have bought an Ether for 300, now it's worth 3,000. Hence, you have to pay a capital gain on that one because you have a realization towards spending it in this system. So that's the first element of so. But what if you do not sell this one? If you take the case first there, you list it, you sell it, you receive some Ether, then it's of course that you receive the Ether in. On the day you receive it, you have the new input value of the ETH, which will be the basis if you are to liquidate and sell that one at a later time, or if you sit still, it will be the ETH that you receive that will be the basis of your wealth to be reported by the 31st of December, but with the value of 1st of January. But if it's not sold, and that could be a challenge, Robert, you sit there with an NFT, you have possibly listed it for, say, you hope the market is up there, you see it's crazy numbers, it's millions of dollars, you list it for $1 million, but no one wants to buy it. Does that mean that you have to report a wealth of $1 million on your annual tax return? Or can you consider it as having zero value in terms of that no one would like to buy it?
If you do not have any buyers at that price, it probably is a lower price, of course. but you should try to find a value that is with the current markets. So if the market in the 1st of January is good, and you find some similar NFTs you can use to compare, then you might lay the value around that one. If there is none such, you could just use the purchase price or minting price for your NFT.
Yeah. And also, once again, don't try to be creative here, because the tax authorities is also able to compare different token elements there, even though they're NFTs. So it means if you have an NFT from a series that you have listed, etc., it could have a higher value than 0. So make a fair valuation of it. Again, back to the flush test. So it's not automatically said that it's going to have a value of 0, but make it a fair value of so. And if you receive an income from this one, from the sale, it's to be considered as a sales income. Hence, it's tax on that one as it's elements that should be taken into considerations as a income value for your tax return. But we also have elements in so way that you could rent NFTs. And we've seen that quite recently, that lots of people are renting NFTs actually for various different purposes, either for gaming purposes, or just flashing off for the weekend that I have a monkey, of course, don't you have it? Or to have access to communities, etc., where you need an NFT to be invited. And in that kind of way, we also seen that some people have been quite creative in terms of that. For example, when the Bored Ape Yacht Club launched their ape coin, some smartass, he borrowed an ape a week before that launch. He understood that ApeCoin was going to be launched, so he was the owner at the time when they airdropped the ape coins into the wallet. So he held that ape coin for a week, received 100,000 worth of ape coins, and lended back the original NFT to the original owner without ape coins. So there's lots of different creative elements there. So think about it also when you rent an NFT out, it is most likely to be considered as a liquidation in terms of a taxable event. So we need to then calculate a capital gain or loss based on what you paid for it towards when you lend it out. So it means that there's a taxable event when you rent out a skin for a game or a monkey for other purposes. So have that in mind also, that there's no such thing as just being able to play around without having tax implications there. And once again, also you need to document it in so way. When you buy an NFT, then you buy it with Ether. You could have an element of realization there as well, just before you have started, a capital gain or loss. Back to the example of buying an Ether for 300, spending it now for 3,000, i.e. tax element before we have even started to buy it. Then it's the same way here. You have a right for a deduction for the costs of the fees when you buy it. And when you receive it, we have already covered sort of the wealth tax element of that you need to take a fair valuation of what is the value per 31st of December of it. And as long as you sit over with it. And that's down to then try to make similarities towards it. It could be that you have a series. Your token is part of a series, but it could be like the NFT of Bjarne Melgaard in Norway, for example, where some in that series of 10,000 of 1,200 or something, that was the total, they are more rare than others. So you could say, well, my version is considered to be not that rare. So then it has a lower value compared to the other ones in the series. So it's not automatically said you have to take an average or something else, but you have to take a fair value and explain to it. So try to document what you do and do it in a fair way. That's our advice. And if you are in doubt, confer the tax authorities or an advisor towards this one. If you have received NFTs as a gift, that's the same way as ordinary cryptos. There's no taxable event, so you can give away a NFT for free, but you have to keep in track and control of the input value, i.e. the value that the giver, that the person that gives you the NFT, acquired the NFT for, because if you are to sell it, you will inherit the input value from the giver of that NFT. And that's also an important element where we see voluntary organizations are receiving cryptos and they have no clue about the input value. And there's a mix-up in terms of figuring out what is sort of the taxable element when they are to liquidate on their side. So if you're lucky enough to receive a ape or whatever, a punk or whatever it might be, then be ensured to ask that giver what the value was when that person acquired it. And if you receive an NFT as an airdrop in the same way as ordinary cryptos, if you receive it, you sign up for an event, you just hand out your wallet address. I myself, I receive lots of different airdrops. I have no clue, literally sometimes, why they end up at my place. Sometimes I just say, well, I have no clue. This is not something I've asked for. I try to Google it, see if it has a value. If it doesn't clearly have a value, I consider it as zero. And that's sort of the normal case. But if you go to an event and they have an airdrop and say, if you go to this event, we will have a draw and one lucky person will get 1 Bitcoin. Of course, then you cannot say it's an airdrop, it has zero value, then it has a tradable value. So you need to look into the object of what you will receive in terms of what is the fair value to be said when you receive an airdrop. So that's also a case-by-case matter that needs to be taken into consideration. And here also as well, when it comes to fraud, or if you have lost your keys in the same way as ordinary cryptos, you need to be able to sort of prove it. And that's a hard case in terms of sometimes being able to prove something, but you need at least to try to document it as best as you can, collect all the information you can, and confer that to the tax authorities, have a dialogue with them, and documented in written in terms of how you can possibly prove this one or not. Because it's easy to say, oh, my dog ate my private keys, or all my cryptos was on this phone and I walked by the water and some guy filmed me and the phone is now in the water, so I lost all my cryptos. That's easy to do. But once again, if you're trying to do such a fraud element of giving the impression that you have lost your keys for tax purposes, remember that everything is traceable. So that wallet will be put on then a traceable event from the tax authorities. So if you move some assets from that wallet at a later time to another, that will be traced and followed and investigated. So hence, don't try to do a quick fix and a quick win here. There's no such thing. But it's definitely possible to lose your keys. It's definitely possible that you don't have access to cryptos for various different reasons, but ensure that you document it. And also have in mind the last point there that you cannot see behind the camera, but it says NFTs that changes attributes. And that's down to that you could have elements where a token could occur as a ticket, for example, as a start. And if you go to a concert, it's an NFT ticket. But then again, it could turn out that that ticket raises in value, because what is, for example, the value of a ticket to the Woodstock, the original Woodstock? Then it could appear as a element where you have something that has an element of wealth. And that means that you need to consider a token from time to time on this one also. So an NFT is not necessarily an NFT. It can evolve and develop. When it comes to also here, soon running up, Auth. Lots of people have asked us about Auth. And that's down to the fact that in ordinary tax worlds today, that's down to that if you have a piece of art at your private home, which you use for yourself, for that kind of private purpose, you can be entitled to have a 60% reduction in the value, in the taxable value, i.e. it could be the insurance value that will be put in place, but you have a reduction of 60% of the value. So there's lots of players out there who has said in a creative way, oh, just print your NFT, put it on the wall for bloody God's sake and get a 60% tax deduction. It's brilliant, you use it. Well, in this guidance that the tax authorities gave out now, we talked with Marius and Robert and the team here, and then we said, well, I think we need to look into the elements of what an NFT actually is, because an NFT is not necessarily a picture. An NFT is a digital asset with unique identification codes and metadata, which you can link towards a picture, and that's correct, a JPEG or whatever, but it's recorded in a blockchain representing the ownership and authenticity of an associated, unique, tangible or intangible asset, i.e. it could be either virtual or a physical item. So that means that what you are acquiring when you're acquiring an NFT is actually a token, a piece of code. And you, by tax law definition, cannot use a piece of code on your wall. So hence, that's why the tax authorities have said as a main rule here in Norway, an NFT will not normally be considered as home content, movable property in this connection, as the NFT in itself is a digital code, i.e. a token, and not an actual object it is linked towards. That's how it's interpreted here. Of course, you can have different elements of a more physical item, whether or not it's art, whether or not the invoice says you have paid an art fee on it or whatnot. All of these cases needs to be handled on a separate matter, but take it as a main rule that you cannot just do a quick fix of printing your NFT, hanging it on the wall and reducing the taxable amount of 60%. And we also see here that lots of people are now trying to be creative in this landscape. NFTs put into the DeFi world, i.e. here's a person who has had 101 of these CryptoPunks, which has a huge value. He managed to put that into the MakerDAO DeFi solution that we talked about, and received a loan of 8 million DAIs based upon that one, pays a 10% interest, but can receive even more from putting this one further into the DeFi ecosystem. So remember that one also when you use this one as collaterals, etc., it's a taxable event in terms of it's most likely going to be considered as a liquidation. And also here, we have briefly touched upon it, but we see more and more gaming examples, metaverse, play to earn. We see here from just a recent survey that we had in Norway here of EY and Arcane Research, where we asked about how many Norwegians who has crypto assets, that the majority of persons who has NFTs in Norway, they are actually using the NFTs for gaming purposes, not slowly investment. So it means that lots of people are doing this one, so have that in mind also. Gaming, which involves tokens, has a taxable element towards it. So by that, we would just like to summarize it, sort of saying that it could be looking like a mess here, but we at EY, we in general, we believe that this will evolve further. We will have better tools. The tax authorities will come up with even better solutions towards how we can report it. We will see a landscape growing, so be a bit patient, because at EY we have an official statement saying we believe that by 2030 more than half of all new business contracts will be done on a blockchain, i.e. on a smart contract. So we are at least of the opinion that this is not something that only private persons will be doing, but we're doing it for a business purpose, and hence the landscape will also evolve by that. So just as the brief 2-second advertisement, at EY, we have our blockchain team, which is both a global team, but also here in Norway. We have close to 30 people who works with this on a daily basis, covering all of this area, everything from the tax and legal side to the technical structure setup. We have own separate groups that we've had in place for years on DeFi, NFTs, DAOs, Metaverse, etc. Sustainability teams, audit, accounting, fraud, forensic investigations, all of this one. So if you have any questions, we can assist you to set on this one. So just feel free to reach out to me on this contact details. And also, if you would like, please connect with me on LinkedIn or on Discord, on Twitter, Telegram, whatsoever, the whole story. And by that, we are a couple of minutes after schedule, but I hope it was useful for you guys. And now we can take, if you, Eric, are willing to have the broadcast for a couple of more minutes.
Of course.
Perfect, thank you. Then we can look into whether or not we can first take and see here if we have some questions in the audience.
I can bring up the questions from the chat because there's very few of them. So we can just take the quick questions that's from there. Perfect. The first question is more broad and not really something that anybody here has the mandate to, but maybe you know some of the signals. Do Norwegian tax authorities consider in the future to simplify taxation reporting, I presume, by looking at what you put into crypto and what you take out of crypto into fiat? I'm not entirely sure what the question means, but I guess I interpret it as, are you going to treat it as a currency in the future? And that is not have to treat it as an object of reporting every detail on every transaction.
In this unregulated space, it's probably very difficult to do something like this. I will believe that the things in kind of like the ASK-konto, aksjesparekonto, like you can put in your money and you can deal with stocks in a broad manner and only get the taxation when you take out your money again. So, but this requires a lot of regulation to be put in place to do something like that. And also, it's the government and the financial department that would have to take the initiative and make these rules.
Yeah, I was about to say it's obviously much more of a political decision than it is a bureaucratic one at that point. So I don't think there was another one that was needed from the chat, but the other one, which I hope I answered correctly, was about sacrifices. If you have not received anything in return for a sacrifice, it is considered a gift, right? And there is no realization of profit unless there is anything expected or given in return for the sacrifice. Is that correctly interpreted? No. Okay, correctly. No, but that's good. That's good. I got it wrong.
No, it's in a way that you have sacrificed this one, not because you are just giving away your cryptos for charity. You're not just giving these cryptos away because you have the expectation that you will receive something back. You have the expectations that you will receive some Pulse tokens, in this example, when they launch. That's why you do it.
But if they haven't launched, it's still just it's like giving something to a friend and then hoping that maybe that guy will like me better and then hoping in the future remember me. But
yeah, and I'm not
even if the token
sure.
even if the token has not been launched, there is still the mere expectation of future reciprocity is enough.
I totally understand what you're saying, Eric, but I personally don't believe that Richard Hart has that many personal friends that is just giving him cryptos. That's down to my point towards that he is running a business. He is marketing this one as something that we will give you something back. And when you can prove that one, that's the reason for why you go into it, that will also be interpreted from the tax authority side. But if it was like you say, you're running typically call it an ICO project where you're just saying, well, I'm not quite sure what we're doing here. Maybe I'll make a physical banana transaction plantation or whatever, or maybe I'll do a crypto project. I have no clue, but I just need some funding. I'll just play around with it. Maybe then it could be considered a bit different, but still it has element of that you have an expectation of receiving something back. It's not like you're saying, well, just have my cryptos, do whatever you would like with it. So clearly in the Pulse chain case and other sacrifices, I personally believe 100% sure that that's sort of a taxable element where you cannot consider it to be as a gift, unfortunately, for the ones that would like that.
Well, it's not a problem for me, but thank you for that clarification, because I think that was something that was not clear to several people watching. So
that could be a problem for Richard Hart as well.
For sure. I personally hope so, but let's go on a different broadcast for that. Let's see.
Maybe donate to Ukraine instead.
Yeah, let's have a different broadcast about that too. I don't have any more questions. So if you are full on your side, you can take questions from the audience, perhaps.
Is there any questions from the audience? Let's see if you can. Just 1 second. So we get the sound out on the stream.
Do we have, are we aware of when those regulations came in place and any impacts from the previous ways of declaring your assets?
Which regulations do you refer to?
When it comes to the taxable transactions, from when this regulation came in place? So if you had crypto 2015,
Yeah.
and those regulations applies to 2015. Well, clearly you explained that you would have to go back and inform and so on. But I guess the question is more related to, it's clearly much more difficult to go back in time, and then there would be perhaps a need to explain, document everything you can, and then go and say how much you put in, how much you take out, to the point that there is a clear historic to be followed, which is perhaps an approach that is intended. So I'm thinking is, if there is a line when when the new regulation came in place, or did this
Yeah, these are general tax rule that has been in place there. So it's only interpretation of the tax rule because it's de facto not a currency. So hence it's treated in this way. So,
right.
so the rules apply even though if you were the first one who received a Bitcoin in 2009.
But a specific guidance that's put out on the Skatteetaten website now and then support the
Oh, no, I understand. Yes. So you mean that if you have treated this one differently previous years and now you get some guidance, well, that's for Robert to answer. But I can say in general that as long as you have documented what you have done and you have paid the taxes based upon it, I believe that there will not be that large of a difference. But it could be, and I think I will pass that one to you, Robert. If you heard the question about if you say, well, we have believed that these rules or they were open for interpretation, and now you have given clear guidance that the rules are a bit different, or clearly it's different. What about if you are to report back in time, or will it be liable for the tax there, or how will that be dealt with?
I would say if you have sent in your tax return for earlier years in what you will call in a good faith, and you see now that you have done some mistakes, then you should consider how big the tax difference would be. And if it's not that great, I would think it would be just fine. But if you think it's a big difference, then you should just try to make a new one and send in a correction, and it will be considered or assessed by the tax authorities, and maybe the old tax return will stand, or we will correct it for you. I hope that was a good enough answer for you.
They're nodding and happy for the answer. Was there any other questions here? One there?
So if you make a project with a DAO or something like that, where you have maybe just a few buyers and you own most of the tokens, and it's sold at the price that suddenly the market cap is very, very high, will you be taxed on that value if it suddenly stops selling, there's no actual movement, or will there be a revaluation of that?
Yeah, I'm not sure if you heard the question, Robert, but it was if you are issuing your own project, for example, an ICO, and you're issuing lots of tokens and you do not sell all of them, then you could be technically sitting there with lots of, on paper at least, high values, and will it be taxed for that one? And that will be sort of considered also one if you have actually minted the tokens, because in lots of ICOs you just have a promise of I will do this one. So it's also down to if you physically have the tokens or not. That's one element, and then it's also down to accounting purposes of whether or not you've done this as a private person or as a business entity. But Robert, you can answer. I will let you answer it, but I have my thoughts around it.
Yeah, I agree with your thoughts, and you have to consider the facts if it's a personal business, and I don't know if it's for wealth tax, you're asking the question, then you would have to take it on yourself if you don't know who else has invested, or you have to spread it out to the other investors.
But technically, you could make a project just for a practice and put it out there, and somebody bought one token, and you had minted already 1 million tokens.
And if
would you then be responsible to?
Yeah, but it's
even if it wasn't really a real project.
Yeah, no, but it's like things have values, and if you have you have created a project, you have 100 million tokens, you have 60% of them, and you sit with them, but you are not selling more than just 100 of the other ones, but they are traded for a certain amount. And of course, then you have to look into what is the tradable value of them. They are not possibly then even the listing value. You could have listed them for $1, but now they're trading for 10 cents. Mm-hmm. Then it's 10 cents multiplied with the amount that you have. That is sort of the value that it could be there, unless you have clearly stated in the white paper or anything else that you are to release these tokens over a period of time, etc. But in practice, you will be responsible to put a fair value of them. What is the trading value? Could be 0, could be 1, or something in between there. Yeah, so you need to have a separate consideration on it based upon a fair market also of, is this a free-flowing market? Is it listed somewhere? Is it some official exchanges that has listed this one? Or is it just 100 of your original investors that has no clue about it, no usage, there's no liquidity in the market, i.e. So you have to take all of these things into consideration before you can conclude on the taxable element of it. So it could be both ways here.
Mm-hmm. This question about currency, I mean, if enough countries decide that this is accepted as a currency, wouldn't also Norway have some kind of pressure to kind of follow those change in regulations?
That's a political question that Robert cannot answer. I can assure you that. That's more of the Ministry of Finance and the Norwegian Central Bank, etc., that needs to take that one into consideration. But that's definitely politics. So I will not let you answer it, sort of saying, Robert, or I will save you from answering that one. But I can say from my personal side, I believe that it will take some time before we will see crypto in Norway as an official currency. That's my gut feeling from working with authorities all over the world also, and the process of
not if we can help it.
That's right, Eric. That's right. But I don't believe that you should hope that we will have it considered as a currency within next year. That's what I'm saying. But it could turn out that it goes quicker. But normally, if we are to do that, it will take years before we have the legal process around it also. So I'm just talking in the short-term perspective of 1 to 3 to 5 years. I would personally say that I don't believe that crypto will be listed as an official currency in Norway. But after that, I might be wrong also. Things could happen.
What I can say is that Norway is having a good sight on what the OECD is guiding and deciding. So we are working closely with the OECD, and their guidelines says for now no recognition of cryptocurrency as official currency.
Yeah.
Don't you think that this approach is actually killing the enthusiasm around this technology? I mean, if you take the approach of this type of taxation compared to what you see for it.
Just use the mic, please, if there's a long question, so they can hear also.
Yeah, I'm just asking if this approach may actually kill the enthusiasm around this technology that is booming out so big. I mean, I'm thinking about this approach and what I've seen in Switzerland, in Lugano, for instance, that actually they are boosting people to invest and to get into this world. And in a way, I think is a pity, because my reaction is like to pull out from this, is not to actually put more enthusiasm in it, and it's a pity, I think.
It's a political question, and it's a good question, and it's a difficult question. And I would personally say that yes, I personally would like to see more encouragement around sort of the innovation side here, compares to regulating a market that is not fully developed yet. Because take that one into consideration, it's very young, very mature. It's still not fully developed. Not the NFT market, not the DeFi, not the crypto market in itself either. So we have to take that one into consideration. But on the other side of saying here, this this is not sort of Robert's fault here either. It's rather the Minister of Finance that needs to decide on this one. And that's down to protecting both stupid consumers, sort of saying, and professional investors, but also ensuring financial stability. But also, like the EU says on the third pillar, where they have on the MiCA, the Markets and Crypto Asset proposal, they also have an element which says we need to drive innovation. So we need to find a balance between sort of protecting the market and also doing innovation at the same time. And that's a very difficult challenge to do when you per se, as a politician, you cannot have a full overview of this market. Even the ones that who is in this one 24/7, we cannot keep fully track of everything that is moving because it's moving so fast. So hence there we need to sort of also understand a bit the balance of challenges and also political levels of who is in charge of the government right now compared to where the others are. So yeah, that's if you're interested, I presented at a crypto conference in Frankfurt a couple of weeks ago, and that presentation is out there, and I had a pretty clear message to the lawmakers there. So more than happy to share that link afterwards if you're interested.
Can I take the opportunity to pitch the Kingdom a little bit here? Because this broadcast is hosted at the Kingdom's YouTube channel. And Kongerik.et is not only Norway's biggest Bitcoin community, but it's actually the world's biggest Bitcoin community as members per capita. In fact, Norway has an extremely strong Bitcoin community that is working on a local level, on a media level, and of course, just internally to build cohesion in our ideas and to make sure that we have a serious value proposition for Norwegian governments and different businesses and everybody who wants to work to make this future arrive faster. So if you feel like we should be more like Lugano or more like El Salvador, then please join us and be part of that discussion, and let's help shape the kind of proposals that can bring Norway into the future. Because one threat that I agree with you, I sense from your question, that is often underestimated by any government is how quickly change happens, and that you could often, be caught off guard, but this being here tomorrow when you thought you had 10 years. So if you want to work for things happening faster, check out discord.gg/Kongerik.et, which you will find in the link in the description below this video if you find it on YouTube. And yeah, in general, just get involved in the Bitcoin community in Norway. It's a really great space, and we're learning a lot and moving fast, but we need everyone on board. Sorry, Magnus, I felt like that was appropriate in that, moment.
Fair point to mention, Eric. Absolutely. One more question here from the audience.
Can you say anything about deduction of expenses in relation to crypto? Let's say that you pay for certain advices and pay by crypto, expecting that you will make more crypto back to be part of certain communities or get access to certain deals. How is that to be dealt with on the tax?
You said you had expenses in relation to
be part of groups or be part of advices or be part of deals. Let's say you pay X amount of crypto to then get access to certain deals that makes you more.
Yeah, that was sort of the membership group that I also showed on the slide there, like the different DAO groups there, and
is it, even if it's
pre-sale groups,
payments to certain projects or certain individuals?
Yeah, well then if you do this as a token, then you will have.
Let's say you pay a Bitcoin.
Yeah.
Get access to certain.
Yeah,
networks.
then you have a liquidation on your Bitcoin, so you have to calculate the capital gain on what you have had in terms of when you bought it and when you put it in, either a gain or a loss, and then you receive a new token back. Then you have to classify that as a value when you receive it, i.e. it could be 0, it could be 1, it could be 50,000. We have several Norwegian clients who has gone into early pre-sale groups where they acquired it for typically 5,000, 10,000 Norwegian crowns, and now it's worth 5 million. So you have to adjust it also based upon the value of the usage when you have that token. So it's just as any other token that you need to classify it as.
So let's say that you don't necessarily know what future deals you get access to. You pay certain things to get part of a group, like a fee.
Yeah, and that's where you have to try to find a fair value on that token that you
No, but
hold.
let's say a Bitcoin. So let's say you pay a Bitcoin today.
Yep.
Expecting that you get access to some deals a year or 2 years down the line. Can you then deduct the 1 Bitcoin value today?
In terms of consider it as lost?
Yeah, no, or as an expense.
I would say that you need to separate here if you pay it in straight as you receive nothing back, or if you receive a physical token back, and if that token can be traded.
Nothing back in regards to tokens, just access to certain networks.
This
Yep.
might be more of my area. I mean, I have an overview of all these different Telegram channels and pump groups and these kind of things that offer different things in return for paying for access. Sadly, that's just like buying any product. And you can correct me if I'm wrong here, but if you buy something and your expectation is to get access to a Telegram group or whatever, and you didn't get the access, or the service didn't live up to your standard, you may have been scammed. But in terms of tax, you bought a product and you have to now tax on the realization of the Bitcoin at the time that you sent it, sadly. I may be wrong about this, but I think that's exactly how it is. But if you feel like you've been scammed in other ways, of course, that may be a criminal case, not for the tax authorities. Yeah, the moment you spent the Bitcoin, it's a taxable event as a realization at the price that it was at the time when you paid.
Yeah, but not necessarily a scam, but if you pay a certain amount, let's say you pay to be part of certain groups, like be a part of a club or part of, getting access to some people that give you advices that might give you access to deals later on. Would that be an expense that could be deducted?
Hjerte, do you have any comment on it? Yeah, you take the mic.
I would just think that if you have expenses to have a benefit later, like a club membership, that would be kind of an expense. And then when you buy something later and you sell what you bought, it will be an expense you had to get the later gain. And of course, the gain on the first Bitcoin you sold is taxable, but the cost and the value of that Bitcoin would be an expense in your next transaction.
Yeah,
I thought could be the solution.
Robert, have you managed to hear sort of the questions and thread or have any comments on it?
Yeah, I think I got the grasp of it. If you pay like Magnus, he's an advisor on cryptocurrency, it's of course legit to have a deductible expense for his services. If you would pay anonymous club or something on the net for someone who allegedly will give you the same advices or counseling, you will have to relate it to the income somehow, and of course document it. It's again maybe a concrete assessment of the expenses here, but if it's expense you have to get to the income you're having in the future, and as well you have to consider for which period the expenses paid for. Is it for a year or for 10 years? So how long is it? We need effects to get a good assessment.
But in
Technically,
take the mic, please, so we get the sound on.
let's say that the expense is this year, but you expect that the gain is next year. Would you have to wait to expense it, or you expense it for this year and then get the full gain the following year?
The expense would be this year, and but it's hard to say if you are promised an income next year or some years to come. Yeah, you would have to at least document that, maybe have a contract. Yeah, and yeah, it's not easy to answer if I don't have all the facts.
Well, quite often you don't necessarily get a contract, but you get access to deals through certain people in networks that would share things that you wouldn't normally get the share of.
This might just go to like inside information, which is not legal to use to income or to get gain for. So I wouldn't go into answering in this case here.
But it could be so easy as, or simple as getting access to early ICOs, to be the first one to get presented ICOs, or first one to get access to token deals.
Yeah, also this could be market manipulation, and I don't know. Document what you got, or if you have expenses for this, and we will assess it.
Yeah, no, I can just mention also that, like you said, on the pre-sale group, like you said, Robert, that there's also the fact that lots of scams there on rug pulls. We clearly see it, and that's down to if you have sort of different levels on the tokens that you can acquire. So if you have a gold token, you get it to buy it on day 0. If you have a silver, you get to buy it on day 1, a bronze on day 2, then you release it on day 3. So it means if you have a gold token there, you can always flip it towards the next level and the third one. And that's where sort of the gain can arise. But then again, the rug can be pulled on the instant moment when the project goes live. So it means you could have a gain and have a higher value at a certain time, but then when the project goes live, they just take the money and go away. So it means that you could have a gain in that process, but if you are the ultimate token holder, you sit still and it's the fact of a scam. Well, that's the same way that you need to consider all different tokens, that if it's liquidated, if it's gone and you can document it, well, then it's not a taxable element anymore. But if you have access to it, well, then definitely you have to need to consideration of what is the value of that asset. You have to take a fair value. It could be close to 0, but it could be even more also. So you need to take all facts into consideration if you agree with that, Robert.
Yeah, certainly.
But it's a very relevant question because we see lots of people are being scammed or whatever. And I can just take one example that we received from some of the members at Kongerik.et, the kingdom as well, that they've received, for example, typically airdrops or whatever in different exchanges where they keep their cryptos at the exchanges. So it's in their wallet there. But suddenly they say, well, now we're not running this project anymore. And still the token is there. It's not possible to take them out of the wallet, to send them to some kind of burner service or physically liquidate them or remove them. And there is where I have advised the persons to just document from this exchange that while this token is not accessible anymore, it appears when you extract the data to CryptoSecond or whatever, that is listed as a value. So you could seem to have a higher income if you just press the button. But since you cannot access it, it's not tradable anymore, then you classify it as a 0 value as long as you can document it with letters from the exchange or others. Then I also recommend to send in as an amendment to your annual tax return and also send it as a letter to the tax authorities to be sure, and also, of course, contact the tax authorities and confirm with them first. But then we have had cases where we have had persons doing such, where the tax authorities has confirmed this has 0 value, we confirm this one. So each case by case, separate matter. It's a boring question, but it's in the same way as you have to say it as in the ordinary tax world as well. Was there any further questions? I've not been able to follow the chat all the way here, Erik, but was there any further questions that you saw from the chat that we have missed?
Nothing on our side. So I think we've been able to satisfy everyone's curiosity tonight.
Just take a last round here in the audience. Is there any further questions, or is everything clear or unclear? And as mentioned, we will share the slides. You can watch the replay, or you can contact us as well. So by that, I would very much like to thank you, Robert, for taking the time, taking the hassle of translating all your slides into English. Hopefully you can reuse them again. And we hope that you have received clarity now, the ones out there, towards a little bit more about how to handle the tax return. Remember also, if you are in doubt, you need more time, it's possible to apply for an extended submission date on it. So that's possible if you are in need of some more time. Other than that, document everything you do. Remember that most likely there's a tax on all elements that include some kind of token. And also, I would like to then say to you, Eric, thank you so much for hosting us once again on your great channel towards your great community. And I'm also very curious to hear from you now, because I've heard the rumors that things are happening in terms of that you're moving from Norwegian to English now, going broader, going more of a worldwide landscape, and you have quite some exciting events coming up now, I believe both on Wednesday and even on Friday.
That's right. I'm going to give a full update on that. But first of all, thank you so much both for this event. I know that our members really appreciate it, and it's important for everyone to have clarity in this. And I really appreciate you, Robert, having the time to come. Magnus, you're a gem to the entire community, and we all appreciate you deeply. So thank you so much. I'm going to skip you out of the channel now. So thank you for tonight, and enjoy your meetup going further, further into the night. I hope there are no taxable events coming up.
Tax on the beer only. So I'll have one for you, Eric.
Yeah. Okay.
See you
That I
soon
hope we
Berlin.
trigger many taxable events tonight.
Bye. Thanks for having me.
Guys.
Bye.
All right. So as Magnus was mentioning, the Kingdom, which is, as I said, one of the world's largest Bitcoin communities as members per capita, when we started out, we only had two goals, which was to create a coherent community in which everyone could feel welcome and feel like they were treated with respect, and where people wanted to share the knowledge that they had accumulated. And the other goal was to create content, create answers and content and accessibility to Norwegians, so that even though we are one of the most privileged nations on earth, and even though we do have great banking services and high trust in government and well-functioning money, maybe we could become more prepared for the future than the odds say that we should be. I'm proud to say that we have largely accomplished that. We are now such a big community. There is a lot of coherence. There is a lot of content in Norwegian coming up. And I've been looking forward to the future. What is the next thing that we need to do? And Norway has a lot of unique advantages when it comes to Bitcoin too. And I want to bring that to the world. I want to bring Norway into the world, and I want to bring the world back to Norway, because Norway has so much green, cheap energy for all the mining industry and others that want to come here and take advantage of the entrepreneurial opportunities that are here. We have such high levels of safety. You can really feel like you can run any kind of risky business with high levels of capital without feeling like you're threatened in an unsafe environment or something like that. We have really highly educated population, people who are ready to take part of knowledge industries and knowledge businesses from day one, that don't need a lot of training, a lot of teaching, and they are a resource to be spent for the world. And we have a lot of money. We have a lot of money that can be spent to become a world leader, a beacon to the rest of the world on this. And honestly, I think Norway has a really, really good heart. Even though we are very statist and we're oriented towards organizing everything in common through some centralized authority, fundamentally, the reason people in Norway want to do this is because we care a lot about community. We care a lot about soft values and about solidarity. And I think Bitcoin offers an even better alternative for the future on how to do that. So I think Norway is prime ground to become a beacon to the world when it comes to Bitcoin. But I would like to invite you all to join us on that journey. So please like this video, subscribe to this channel, and then this week you can join us on a journey as we launch into the English space for the first time. Now, it's going to be a pilot week. We're going to test it out a bit, collect some experiences, get some feedback from the viewers, see what you guys also want. But we started tonight with the tax authorities and the tax guide, which I think is a pretty soft launch. It's very knowledge-oriented and answers some very practical questions. On Wednesday, my regular breakfast show, Crypto for Breakfast, is going to be rebranded Bitcoin for Breakfast. I know, to an English-speaking Bitcoiner, it's going to sound weird that it ever had the word crypto in it, but that's how it was. Going to finally become Bitcoin for breakfast, going to go to English. That's going to be a regular breakfast show, just as you remember from your childhood, with some guests, some music, some news, maybe some rants and opinions. And it's going to be extremely subjective, because changing the world is not an objective activity. Now, on Friday, I'm going to go live on BTC sessions. I'm going to be a guest at his channel, which I hope will be a great opportunity to reach a wider international audience and make them aware of what's going on here under the Northern Lights, because it's going to shock the world once we are getting this further. And on Sunday, finally, we're going to cap off this pilot week. We're going to get Knut Svanholm, one of the absolutely most interesting voices in the Bitcoin space, and author of no less than 3 books on Bitcoin by now. His latest book is called Everything Divided by 21 Million. And he's going to be here on our channel for a book review of his latest book on Sunday. It's probably going to be around 8 o'clock, but we don't know exactly. Just subscribe to the channel and you'll get the alerts, and then turn on the alerts, and then you know how it works. Anyways, thank you so much for joining us tonight. I really appreciate that. If you want to join the Norwegian community, we have an English-speaking space as well. It's discord.gg/Kongerik.et. You'll find the link in the video description below. And with that, all I can say is thank you so much for your attention. I hope you all have a lovely evening from the bottom of my heart. And I'm going to play you a cute little piece of music as we move away from here. So, have a good evening, everyone. Ciao. Kongerik skal være det stedet der du føler deg hjemme, og får den tryggheten du trenger, og den kunnskapen du trenger til å kunne gå ut i den store, vide verden og erobre de brutale kryptomarker på kontinentet. God morgen, alle sammen. Velkommen til en ny episode av Krypto til podcast. Hara hara party, hara hara party, hara hara party.